at the end of the day, what it allows for us to do is the more deals you see, the better you can fine tune your skills in understanding deals and structures. But a lot of times when you're finding deals off the MLS, you can get a better shot at seller financing or, because they haven't really thought about selling. You're kind of like taking the thorn from their paw, and you can help them down that path. My best deals out of my last 5 deals, 2 were MLS and 3 were off market. Mm-hmm. And on 2 of the 3 deals that I did off market, I got seller financing. The other 2 were conventional.
I want to call your attention to an amazing video, almost a rant. I'm talking about a bloodbath in real estate with Dion. He actually had to pull over in his car. He was so agitated and upset. He now understands exactly how the real estate market is going to end up in a bloodbath. I thought he did a great job of breaking down all the examples, and I think he is right. I think there is a lot of pain. I think there is a lot of losses, and yes, it will be a bloodbath. So, Dion, let's break it down. Share with my channel your epic rant on where the pain is coming.
So, we've called a real estate crash in transactions. Mm-hmm. We've all been right 3 years straight, probably even longer than that.
Yep.
And it made me a little sad. I started the video with it. This sucks. I'm going to join the Crash Bros. I'm making an actual crash video where I believe the data.
Yeah, so it's not a whatever you call that, clickbait.
It's not clickbait because and I've kind of made the clickbait video for 3 years. Every year, once a year, I make a video that says real estate crash 2022, real estate crash 2023, and then I go into all the reasons why residential is not going to have a crash. I don't get very many views. So this year, I was a little angry, and I was thinking, if I make that video again, I'm not going to get any views. So let me make the video on the actual crash I see coming.
And again, crash in value,
in price.
In price.
And not, I'm predicting it happening in 2025. It has happened in 2023, 2024, going to continue in 2025. And we have proven data for this. And a crash is when things go for up to 20% or more less than what they sold for, right? So not a reduction in wish price and not the real estate crash of 2008. The largest market-wide thing we've seen from the 52-year spreadsheet is 8.9% drop in 1 year. Mm-hmm. But this is, in 2007, we had 51% adjustable rate mortgages.
Yeah.
Mm-hmm.
Currently, we have 85% adjustable rate mortgages in commercial lending. So storage. Go ahead.
I love how you break this down because, folks, Dion and his epic rant tied together perfectly. And he's just started here. The stupidity and idiocy of the residential collapse in the GFC with what I actually will go one step further than Dion. I believe the crash, the bloodbath that is going to occur in real estate will be bigger when you take across total dollars this time, especially if you think about the equity, right? If you guys don't recall, a lot of the loss last time was on banks because the leverage was 97, 98, 99%, sometimes 101. Today, in this epic bloodbath, it's going to be real people like you and I losing hundreds and hundreds and hundreds of thousands of dollars. The banks will be hurt, no doubt, but equity is going to be wiped out.
So you have a lot of commercial lending often has adjustable rate loans. And for 40 years, we had slightly downtrending interest rates.
Correct.
But here's where the perfect storm comes in. In 2020 and early 2021, we had a 0 Fed rate. Mm-hmm. We had residential loans in the 3%. We had commercial loans in the 4%. Mm-hmm. That's doubled. And we have loan maturity coming. So commercial lending was set up for that 40-year downtrend. So many people, they didn't just buy in 2020 or 2021, and they didn't just refinance in 20 or 2021. They did that, let's recycle capital thing, pull out as much money because we can maybe even keep the payment the same because our ratio that the lender requires, which they're different, but DSCR lenders that I've talked to said we need a 1 to 1.1 ratio. So if the rent If the mortgage is $1,000, the rent has to be $1,100. Right now, you have to multiply that by millions for some commercial loans. But Zuber, you've talked about the deal in Texas. It's like 148 million sale. A couple years later, it sells for 40 something million.
Yep.
That's not, hey, I think it could happen in a couple of years. That's deal after deal. Like these syndications blowing up that started
Right
3
now.
years ago.
Right now. Yep.
And I've seen Matt make several videos talking about what were some of the projections these syndications were making in 2020.
Oh my word.
You expected
2030. There was one that was like talking about 68% IRR. Like Ponzi level.
Right. So if you have a 68% return coming, you might as well pull out a bunch of money and drop that down to like a 30% return.
Yeah.
And, because rents were going to continue to double, right? They were going up after the moratorium and the rent freeze. And now here's the other element that really changes this. And it's kind of nuanced. Most commercial lending, if you look at like where the majority of it is in housing, so not warehouse, not office, it's in cities.
Yep.
The larger apartment complexes is where the work is. So your 500 unit apartment complex, you might be getting a 40 unit in Graham, Washington, but you're not getting a 500 unit there. You're getting that in Seattle. You're getting that in Tacoma. You're getting that in San Francisco. You're getting in the big areas where the big builds are going, but people don't have to live there because remote work kicked in 3 years ago, more than at any point in our life. So now people move out, pay higher rent, and get a deal that's much less. So you have these builds going in where apartments have adjustable rate, loans maturing, interest rates doubled. NOI is tanking because people don't have to rent in the cities. So they have vacant units. The pain is going to be real. It's going to continue. So this isn't me going, hey, I've made a prediction, because one of the best comments that somebody said is, are you calling the crash as the same one you did for the last 3 years? Yeah. But here's the joke that went over everybody's head. I pointed out in my video, here's all the data that proves it's happening. It's continuing to happen. It's the perfect storm. The comments went one after another of proving, well, this won't happen in residential because it has fixed rate debt. This won't happen in residential because we did, 2 decades in a row, we built over 25 million homes. And then in 2010s, we built less than 6 million homes. Right. Like all of the data that I could have put in the video saying there's no residential real estate crash coming came in the comments, people arguing with me, talking about the real estate crash. It is going to be a bloodbath. It is going to continue to be a bloodbath.
Yeah, it is. It's so first and foremost, you're absolutely right. We've been talking about this for a while. In fact, Jonathan Twomley and I should go find that video 2 years ago before a drop of this happened. We quickly turned $100 million building into $48 million.
Right. Correct.
Right. And folks, if you don't understand what's happening, there were buildings being sold. So let's just give a real example. So I invest in a tertiary market called Fresno, California. I invest in what's called B and C class properties. My B and C class properties has over the years, and I've been there for 20 years, traded for something between an 8.5 cap and an 11 cap. I sold some terrible buildings, C class buildings, needed complete rewirings and new roofs and all these things for a 6 cap. They went as low as let's call it a 5 cap. So what does that all mean? That means the value is screaming higher. And what's happening now is in B and C class properties, they're not trading because there's no price discovery. We have banks extending and pretending. And Dion is absolutely right. Class A stuff has already suffered a 20%, 25% haircut. Class B and Class C, let me say it this way. It should be 50%. Because again, if you're buying stuff with a cap rate of 5 that should be at a 10, and oh, by the way, your NOI is down because vacancies are up, taxes are up, maintenance is up, insurance is up. Dude, you might have a 60% haircut coming to some Class B and Class C. What do you think, Matt?
Absolutely. I think it's going to be focused on the stuff that was variable rate debt. Those guys' loans, a lot of it. So some of them took 3-year debt, right? And so we saw that expiring.
311s.
Yeah. It can be a lot of 311s. It can be I think a lot of what I saw was 5-year debt. There were the guys that were walking the razor's edge, like Ben Mala, who were at non-fixed rate debt. And guess what? He's getting his ass kicked.
Oh, he's selling his portfolio now.
He's having to do a lot. Like I don't want to say he's in trouble because he has hundreds of millions of dollars, but he certainly
It'll
is
be
getting,
uncomfortable.
he certainly isn't enjoying it like he was for a couple of years when he was paying 1% and he was getting 9.
Right.
But then he used that to expand, but then he expanded into other assets at kind of the same type of bad valuation. So I think what's going to come of it is, I think that, you never find that companies or people or businesses are repurposing assets when that market is healthy. And we're seeing the highest repurposing of office and commercial real estate, turning it into residential that we've ever seen in the history of mankind.
Well, let me ask you this one question, because we're a little short on time, but I wanted to ask you guys this. So it is so bad in commercial real estate now. And again, I think going to get worse. And let me be clear, should get worse. I've always believed that if you do a bad deal, you should suffer pain. I hate the idea of bailouts. I've actually read 2 or 3 different articles in the last 48 hours that went something like this. The commercial real estate market is about to blow up. But great news, folks. We've got Trump in the presidency, and Trump's a real estate guy, and Trump's going to bail us out. I hope he doesn't. I do not want it. I hope not. I hope he goes, hey, you morons did a bad deal. You should pay. But no joke. I've read at least 3 articles. Basically, I think it's syndicators hoping for a Hail Mary. I do not want these idiots and assholes bailed out. If the deal's bad, the deal's bad. Let it retrade. Let it all reset, and go from there. Dion, what do you think?
So since we're not going to be all doom and gloom in this video, here's the sweet spot. Here's how we, or you, the viewer, can benefit from this crash. And I agree, they shouldn't be bailed out. I think Trump, having filed bankruptcy so many times, knows that there's a system in place to protect the people so that we don't have a debtor's prison. We have, you lost everything, go start over.
Do it again. Yeah.
The people who bought a bad deal, who bought in. Now, the thing that I don't like is adjustable rate debt, loan revaluations periods, values being based on net operating income. I like residential real estate. Mm-hmm. So there is an element of commercial real estate where there's a couple of lenders, Convoy Home Loans, Velocity Mortgage, where they offer fixed rate debt on up to 10 units. Now, sometimes it might be more, sometimes it might be less, depending on lending fear. So you have to check on what's going currently. So I would set up your search for 6, 8, 10 unit places.
Yes.
That bought or refinanced out their money in 2020 or 2021. The rates are readjusting. They're going to have to sell at a loss. The bank's going to take it and say, okay, we're going to take a loss as the bank, but we need to find a buyer. So you buy it at a lower amount where you can afford to do it at the higher interest rate. The owner can't refinance because the bank won't go, we'll let you refinance at a higher rate. We'll just knock $500,000 off the value so you can do that. No, but a new buyer can get that deal. So look for the deals that are small enough to get fixed rate debt. But this is where you can 1031. This is where you can take your down payment. This is where you can get into fixed rate debt on an asset that is currently in trouble.
Yeah, let me just wrap that up before we go back to Matt, because I want people to realize this is exactly the strategy I talked about in One Rental at a Time, my first book, where we went from 8 houses to 80 units. I think the biggest thing we bought back then was 18. But you definitely, I love this strategy. Again, think about 1031ing out of a house into a 5-unit, which is exactly the first thing I did. And we still own that today. Just to clarify the lenders, Convoy Home Loans will do up to 10 units. Velocity actually will do up to, I think it's like 30 million. So if you bought 30 or 40 or 50 units, they only offer fixed rate debt. You can do a 10-year IO if you wanted to, but all their products are 30 or fixed rate debt. They don't have a unit size. It's a valuation size, just so you know. But yeah, Matt, what do you think about this 1031ing and looking at 5 to 40 units? What do you think?
I like it so much that I've done it twice this year already, and I'm doing it a third. There's money to get into these assets. Like, I mean, that's the the crazy thing about it is that there's still assets out there. You can wait and find the deals. If I found 10 deals tomorrow, I couldn't do them anyway.
Yeah.
But we've deployed a lot of different strategies into getting us deal flow outside of the MLS that give us the opportunity to just see more deals. And at the end of the day, drink Dion. I said that on purpose. But at the end of the day, what it allows for us to do is the more deals you see, the better you can fine tune your skills in understanding deals and structures. But a lot of times when you're finding deals off the MLS, you can get a better shot at seller financing or,
for sure.
or, because they haven't really thought about selling. You're kind of like taking the thorn from their paw, and you can help them down that path. My best deals out of my last 5 deals, 2 were MLS and 3 were off market.
Mm-hmm.
And on 2 of the 3 deals that I did off market, I got seller financing. The other 2 were conventional. Now I've got this property that's going to sell. I think we closed just after the first, and there's going to be about $250,000 there, which gives me about $1 million worth of buying power.
Yeah.
We'll see how I deploy it. We'll see if I do a double close and I go buy something for 400, which is the strike price of the property that I'm selling. Or if I use that 250 that's going to be sitting there to buy $1 million asset. Because if I do a double close, I can basically take $300,000 out and put it in my pocket anyway, which I kind of like that idea. So
yeah. At the end of the day, folks, I've been trying to say this for a couple of years. There's going to be tremendous opportunities. I think the pain will be worse than the Great Recession, but I also think the opportunity will be bigger if you're prepared. I think that opportunity is in the 5 to 40 units. And clearly there is some word that I can say that makes Dion drink, and I haven't caught onto it yet. So
I was going to close out where you can find us. You can find me right here on YouTube, where I have to restock my vodka for these 3 amigos, and because I start watching the Lumberjack Landlords Thursdays at 6 p.m. Pacific, and every time the phrase "at the end of the day" is used, I have face planted at the end of one of his live streams. So
it's true.
All right. There we go. At the
Such
end of the day.
That's right. Cheers. Can't drink all day unless you start early.
There you go. Matt, let's wrap us up. Closing thoughts. Bring it home.
It's just like anything. In every market, there's opportunity. In your market, you have to find that opportunity. There is an asset that is undervalued right now. There is an asset that you can track down and find that you can execute on. You just have to figure out, is it single family, small multifamily? Is it 5 to 10 units? Is it 20 units? Is it even commercial real estate? Start to learn and look to understand some of these units. For me, we still believe that pocket is going to be in 1031ing out of our single families and going into small multi if we can find it. But if not, we'll get into a more risky asset with a whole lot more upside because we have the ability to carry it. So
yeah, I really look forward to repeating what was in my first book, where we went from 8 to 80.
Yeah.
I've been calling this for 2.5 years now. It feels like it's like right there. It's right on the edge.
It's coming. I think Trump's going to help deliver it for you. I think he's going to deliver the pain that he was talking about.
Yeah. And to your point, I really don't see Trump bailing these guys out. To your point,
I don't either.
He's declared bankruptcy. It's a tool. I don't want to. I stop these bailouts. If you did a bad deal, you're supposed to lose. Those are the rules of the road.
Correct.
Guys, you're amazing. Take care.